In today's video, I am serving up your piping hot September 2021 Bitcoin Monthly Digest, where I cover fundamentals, on-chain analysis, latest news to give you the big picture for what is happening in Bitcoin. So let's get into it. Welcome back to another video. My name is Ian Major. I'm an entrepreneur, Bitcoin pleb, and all-around raging capitalist. And as I said, in today's video, I'm going to pick apart some of the latest on-chain analysis. We're going to look at recent growth of the Bitcoin network, the Lightning Network. We're going to take a look at how emerging markets are really kind of growing like crazy in their usage. We're going to look at the latest and greatest in the crypto tax provision as part of the U.S. infrastructure bill, and a whole lot more. So you won't want to miss a thing. For all those returning to the channel, welcome back, my friends and fellow raging capitalists. It is great to have you as always. And for those new to the channel, welcome to you as well. I know there are many of you. Over 80% of you currently watching this very second are not subscribed. And so if you like this content, I invite you to consider subscribing and join us in our merry gang in cyberspace. I cover all manner of Bitcoin related content, including videos like this, wallet tutorials, technology, you name it, all the latest and greatest. And so you won't want to miss a thing. With all that out of the way though, let's jump into some of the latest on-chain analysis and fundamentals. All right, so as of the making of this video, we are up some 65 to 70% from the bottom around 29,000 or so. And so, you know, pretty casual. That was over the course of about a month. And so this begs the question, you know, is this sustainable? Is this different than the first time we were passing some of these price levels, etc.? So I'm going to dig into all of that now. I think the punchline is that this is a really healthy place to be. It looks a lot more sustainable and healthier than the first time we crossed, 47, 48,000, etc. But let's take a look at what is going on. So this first view I have is the hodler net position change. A lot of these views come from Glassnode, as well as Dylan LeClaire, Will Clemente, and others whose Twitter posts I will link in the description down below. They are putting out great stuff all the time. But in any case, this hodler net position change is a really important one. Each of these bars is essentially showing the net change in Bitcoin terms for what they deem as hodlers. And so these are entities that are typically holding coins for at least 6 months. Now, we could argue over whether that's the true definition of a hodler. In my mind, it would be a lot more longer than that, but nonetheless, that is the definition for purposes of this view. And what you can see is that we have this huge sort of spike most recently, and perhaps even more importantly than that, you have this flip from red to green that occurred roughly mid-August. And so this is very good, right? People betting that we're going to suddenly turn around and go back down to 29 or even below. I mean, it's just kind of a ludicrous notion when you look at this particular view. So this means that stackers are stacking, right? And beyond that, though, the caveat is that there's not a whole lot more than that. It's pretty clear that you've got a steady grind of small incremental, institutional adoption, small grind of, retail adoption. But for the most part, these are just, hodlers stacking. This is the DCA gang. Folks who are just dollar cost averaging, buying Bitcoin week in, week out. That is the same group that sort of set the floor back at 29. And so that's the same group that is just gobbling up and continuing to accumulate Bitcoin. And so we haven't seen that big retail FOMO rush back in. And this is reflected by this view of the mempool or the memory pool. I know there's not a lot of great axes on this, but this is basically looking at the height or the y-axis of this chart represents the overall kind of activity, the number of transactions that are sitting in the memory pool. If you don't know what that is, check out some of my other videos where I explain how the Bitcoin protocol and system actually work. But suffice to say, you can see that this drops off pretty precipitously And really for the last couple months, we've just been kind of grinding it out. And so you haven't seen a big return of retail FOMO, but that is what it is. And, where that sort of leaves us is this very nice comparison from Dylan Leclerc, where he says, 48K in February, GBTC premium, so this is the Grayscale trust, which is really the only kind of institutional investment vehicle for a lot of entities currently, particularly in the US. And so you had that trading at a big premium, meaning Grayscale was buying a lot of Bitcoin. You had this big buyer in the market, which was Grayscale. You had long-term holders actually selling, right, and taking some off the table. You had a lot of leverage in the derivatives market, in the futures markets, and so this is all telling a story of probably not that sustainable, right? Whereas he compares in August 48K, you don't have Grayscale buying. It's really the long-term hodlers that are just stacking. You have a lot less leverage in the system. And so his point here in saying that these are two different scenarios is absolutely right. And 48K in August is looking a lot more sustainable and robust than it was the first time we hit it. And the other thing we should do, as always, is to keep the big picture in mind. The following couple of charts come from LogScale. Again, I'll link that in the description below. So this excellent view is looking at a few things. I know the text isn't as readable, so I'll kind of talk each one out. The pink line is showing essentially Bitcoin's inflation rate. As we know, that is a diminishing supply curve, which will ultimately go to a terminal inflation rate of 0. And so that is a straight line down. Meanwhile, in the thick white line, you have G4 central bank balance sheet as a percentage of GDP. So these are the biggest central banks in the world, and plotting how big their balance sheet is as a percentage of the nation's GDP. And as we can see, this has largely been a straight line up as well. And then you have the Bitcoin Liquid Index, which Bloomberg is using as a measure of price. And so we can basically see that it is just, it's pretty stark, right? Fiat is programmed to debase. There is no other way around it. There is no political scenario in which governments are going to just let the whole house of cards collapse. We haven't seen it in 50 years, and so it's not going to start now. Fiat will continue to debase versus a increasingly supply scarce in terms of new issuance, Bitcoin. And so it's sort of a no-brainer there. We should also kind of keep ourselves honest on where we are in relation to prior halving cycles. So this is showing what they call Epoch 2, which is basically just the cycle from 2016 to 2020. And then Epoch 3, which was the last Bitcoin halving in May of 2020. And it's sort of the x-axis is plotting this in relation to since that halving event occurred. And as you can see, I mean, we've seen just absolutely nothing even remotely close to the to the run-up we saw last time around. Now, you could even say, well, each subsequent epoch is surely going to have diminishing returns, right? Like you're not going to necessarily see that big of a spike each and every time on a percentage basis. And I think that has some degree of logic, but even if we accepted that that was true, we still haven't seen anything yet. And the reason is the following, right? I mean, we're sitting at maybe 900-ish billion in market cap for Bitcoin, maybe a little bit less than that. And as you can see, the global financial wealth is truly, truly staggering. So, I mean, you've got, 50 billion in pension funds who are desperate, 50 trillion, right, in pension funds that are desperate to earn a return for their participants. High net worth individuals is huge here. Insurance companies, 34 trillion, again, same as pension funds, absolutely desperate to eke out returns. There is just going to be no way to do that without some exposure to Bitcoin. And so all these pools of wealth, not to mention the $20 trillion in negative yielding government debt, that is negative on a nominal basis, right? There's no way. And so that is what's to come. Bitcoin is going to continue to suck up this capital like a black hole. And perhaps the most sort of elegant display of that emergent, unstoppable monetary network is the following view from Dylan LeClaire once more, where he's showing the 200-week moving average. So that's basically the average of the last 200 weeks in price, which he notes has never declined, ever. And that has just breached 15,000. I mean, just think of that for a second, right? Like the average of the last 200 weeks is only just 15K. And so his point is absolutely spot on. Strip away the day-to-day volatility, and what you see is an emergent global monetary network, perpetually growing stronger and more valuable. I couldn't agree more with Dylan. And that really is kind of the big picture to keep in mind. The other nice thing we've seen recently is this absolute pivot on hash rate. So, as we can see, obviously the gigantic plunge here is due to the China crackdown that we saw, it's hard to believe, but over kind of month and a half, 2 months ago. And that has rebounded so fast and furious. I mean, it's caught even a lot of, Bitcoin plebs and enthusiasts off guard. I mean, the rate at which it's bounced is truly extraordinary. And we're already back to some of the levels seen just a few months ago. And so that's, I would imagine just going to continue to increase. You now have companies like Compass Mining. You have just a lot of momentum here in North America and elsewhere. And so, I mean, what more do you need? What more do you want to see? China came out, tried to crack down on this. People thought it was dead. I mean, look, it just doesn't care. Honey Badger doesn't care at all. And so the network's recovering, hash rate's recovering. With that, historically has come price as well. And so you just love to see it. All right, so a month ago, we were really in the bowels of all the back and forth around the crypto tax provision as part of the U.S. infrastructure bill. Just as a recap for folks, there's this very large infrastructure spending bill. And as part of that, they have to put in, little terms that outline how they're going to help finance the spending. And so one of the ideas was, hey, we can raise 30 billion or so in additional tax revenues over the next decade by cracking down on crypto and making brokers report each and every transaction over 10,000 US dollars. And so that was the premise. And then what got people up in arms is the interpretation of broker. The language was very, very, very vague. And then there was a lot of back and forth over different amendments trying to be made at the very last minute to make the language of broker and what that means more friendly to the industry. Ultimately, you had wide agreement within the Senate, and then one stodgy old boomer is like, no, just because he didn't get his defense spending bill through. And so, I mean, it really just shows you a perfect view of the political process. Your vote doesn't matter. It doesn't count for anything. Your tax revenue, as we've seen with all the Afghanistan stuff, has been used for, just utterly ridiculous means and purposes. So the political process is completely not a thing. It's broken. Don't vote and write code instead. The cypherpunk mantra. Ask me what I really think. But in any case, since then, so basically the one guy downvoted it in the Senate. So now it's gone to the House. Since then, the chairman of the SEC, Gary Gensler, has made comments and references in relation to the Howey test. So this is sort of a precedent for interpreting whether something is a security or not. And so this says, this is from Investopedia, the Howey test determines what qualifies as an investment contract and would therefore be subject to U.S. security laws. An investment contract exists if there is, quote, an investment of money in a common enterprise with a reasonable expectation of profits to be derived from the efforts of others. The Howey test is important, as it notes, and cryptocurrencies and initial coin offerings may be found to meet the definition of an investment contract. I think that is pretty clear. And so for what it's worth, Gary actually knows what he's talking about. He has taught classes at MIT about Bitcoin and cryptocurrency. And so the current interpretation and a lot of the back and forth in the amendment process really did point to this division between Bitcoin, which is this kind of truly decentralized, almost commodity, right? This synthetic commodity. And then everything else that clearly meets the security, specifications as just discussed from the sort of Howey test, which are basically like investing in Ethereum's like investing in a tech company. Cardano, investing in a tech company. That's sort of, that makes sense, right? When you think about it, all these ICOs, it's just like a security. And so I think that's probably what we will see. But hopefully this lands, the very latest in where we are can be nicely summarized by this piece here, where it's basically saying, so what now? Again, the most difficult time to try and change a piece of legislation is when it's about to be voted on. In the case of the Senate infrastructure bill, there was a furious effort to amend the crypto provision at the last minute. When that effort failed, crypto groups turned their efforts toward the House, where the Congressional Blockchain Caucus began working to raise awareness among members about the negative impact the Senate provisions could have. The House, however, agreed in a 220 to 212 vote to a process that would prohibit any amendments from being considered for the bill. The House is set to vote on the bill by the end of September. So there you go. I mean, even in the House, despite a lot of rational debate, no amendments, so that's going to get voted on. It's probably going to pass. And there you have it. You'll have this extremely vague broker language that it remains to be seen how that will be interpreted. Good news is this wouldn't kick in for, by as far as I understand, a couple years, but it sort of is what it is. So again, political process, I think all of this just underscored and illustrated why Bitcoin is so important. Bitcoin is a peaceful opt-out of the current system. You don't have to vote for anything. You simply act as an individual and trade your dollars for Bitcoin, which is shorting the dollar and longing Bitcoin. It really is as simple as that. It's clear that the political process is broken. I commend what, Senator Loomis and folks are doing and pushing, and there will be quite a political presence on behalf of the crypto industry in Washington, like it or not. And so, I don't think there's any kind of risk of any sort of ban. It's clear that the government needs to, suck from this succulent fruit that is cryptocurrency. So they're not going to let that go. But it is pretty disheartening to see this process play out. And so there you have it. It is what it is. On to some better, more exciting news. The Bitcoin network saw a overall adoption and usage growth of 880% from July 2020 to July 2021. And so this study done by Chain Analysis looked at and categorized different different jurisdictions and ranked them in terms of their Bitcoin adoption. And this is seeking to measure adoption in a way that captures kind of everyday usage and like actual use cases as opposed to just sort of speculative trading. And as we can see, Vietnam actually tops the list by quite a long margin. You've got India, Pakistan up there quite highly as well. Kenya and Nigeria, which we've heard a lot about in terms of the peer-to-peer trading in Africa. You love to see it. Venezuela, not surprisingly, up there. US is up there as well. And you can see some of the other names on this list. So, I mean, I'll link the full study where they share their methodology, which is based around these three kind of pillars: on-chain value received, on-chain retail value received, and then peer-to-peer exchange trade volume. So I'll link this sort of full piece if you want to take a look. But the punchline there is that Bitcoin adoption is raging and increasing, and it is increasingly being led by emerging markets. We've got the legal tender law for Bitcoin going into effect in El Salvador very shortly here. Again, I've said this many times in prior videos. I'm actually fully against legal tender laws. No government should be telling its citizens what money they can and can't use. But nonetheless, it is going to be solving a huge pain point, which is remittance fees. And so whether it's El Salvador, Vietnam, Kenya, Nigeria, it really is pretty awesome to see, Bitcoin, especially peer-to-peer usage, increasing significantly. And that also comes at a time when the Lightning Network is absolutely killing it as well. Over the last 2 months, I think the Lightning Network grew by about 45% or so. And so you're starting to see this hockey stick growth of the network, both in terms of opened channels as well as the amount of Bitcoin in the channels themselves. So you're up to about 2,200 Bitcoin as capacity on the Lightning Network. So really, really exciting stuff. And so let's go ahead now and summarize everything we've covered and wrap this video up. All right, gang, so there you have it. Just to recap everything we've covered, the sort of punchline and executive summary of some of the on-chain analysis we looked at is really that, long-term hodlers are stacking their hearts out, dollar cost average all the way. We're in a much healthier place than we were back in February when we first crossed some of these price levels in terms of, nowhere close to as much leverage in the system, which is very, very good to see. And I think very telling, right, that we're already back at 47, 48, 49, and you really don't have much, if any, leverage. And you have one of the biggest buyers, Grayscale, that's not a net buyer currently in the market. So that's really cool to see. With that being said, there hasn't really been that kind of launch of retail FOMO again. And so we're sort of steady as she goes. Although I think that could change very, very fast. There are some rumblings about ETF news in the US. So we'll see, where that all lands. We also talked about some of the other news bits. It's been pretty depressing over the last month to see the political process in the US just fail to do the logical, rational thing, which would really be to chuck the crypto tax provision out of the infrastructure bill completely. But knowing that, the government has to get their hands on anything that's valuable, we knew it would happen. It's just unfortunate that none of the thoughtful amendments put forth by senators who actually know more about what they're talking about than less, all of that was, just arbitrarily struck down. But we saw that nonetheless, there is just a ton of good news and a ton of reasons to be bullish. The big picture is arguably even more intact. You just have by the day, news and institutions failing around the world, losing trust among the public. All of this is going to be a boon for Bitcoin. And so it is a great time to be a Bitcoin bull. But there you have it. I hope you found this useful and valuable. If you did, you already know what to do. Give this video a like, comment down below with your thoughts, questions, themes you'd like to see in future videos. I'm actually going to do a deep dive into kind of geopolitical game theory in a video for next week. So be sure to tune in and subscribe if you aren't already. But until then, we'll go ahead and leave this video here. As always, every sat counts, my friends. Until next time, see you there.